All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin analysis session. In this session, we're going to talk about an interesting question that I got from my active investor channel a couple of days ago, and that is how to trade certain patterns or something like a double bottom, but in the context of a bearish trend, okay? Because this is, I think, a very important topic that people should really get a good grasp on, and it will make things a lot clearer for you when you're faced with this situation in the future. All right, so with that said, let's get started. Let me just pull up my my slide here. And okay, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, next. So real quick, if you're new to the stream, I'm going to explain how it works. I'm going to try to keep this at a half hour. That's the goal. And normally what I do is I go over the economic calendar first, which is what I'm going to do. Then we're going to talk about this technical lesson that I want to provide. And then I'll answer questions, but from students only. So if you're a student or you're a community member and you have a question, I can answer it. If you're not, well, in order to keep this at a half hour, I won't be able to answer your question. But you can join our community. All right, hold on. Let me just put TradingView up over here. Okay, I could see you guys now. You could join our community. There's a Discord community. There's a link in the description. Check it out there. It is free. All right, there's a free area. And I just want to point something out real quick about that. There's a channel in the free area called Trade of the Week. And that's where the trade scanner, which Steen is referring to here. If you look at what Steen says, the bot is more green at the moment. Yes, so we have this thing called the trade scanner. And this thing, basically, it's trade automation, and it calls trade ideas. We have it in the coins, we have it in stocks, and we have it in Forex, okay? Now, you can get an idea of how this works by joining the community. There's a channel called Trade of the Week, and each week, a new trade, a free trade idea is shared, okay? So 1 week, it'll be a stock. 1 week, it'll be a coin. 1 week, it'll be a Forex pair. And it gives you the entry, the stop, and the take profit. All the information is laid out for you there. Also, we have a trade results section, so you can look back and you can see all the recent trades that have come out and that have been closed for either a loss or a profit. You can see all that. It's available now. So I highly recommend that you paper trade these trade of the week ideas to get a feel for how it works. If you like this trade bot that we have, you can send me a message and let me know. But I took the link off the description for the trade scanner subscription because we're making some major changes right now, and I'm going to be able to offer this bot, the access to the bot, for a lower price. So there's no point in paying the price that I have now. We're going to have a better price for you, and we're setting up a website where you'll have all this information. Okay, so just be patient. Maybe that'll be out like in another week or so, and you can take a look at it there. But in the meantime, go to the community. It's completely free, and check out Trade of the Week. All right. And with that being said, let's get this thing started, shall we? And also, as a fun fact, if you want to share what city or what country you're from, that's always nice to hear. I am streaming from the greater New York City area, also known as Northern New Jersey. So that may explain why I talk funny. I know I need to come up with some new material. I've been saying that for such a long time. All right. So anyway, there is something to be said about introducing automation to your strategies. All right. I just want to point, before we get into the economic calendar, I just want to point something out. I came across a statistic in an article that I was looking at. I believe the statistic was from a company called Select USA. Don't quote me on that. I'm not sure if that was the exact name, but I believe it was something like that. And their statistic was 60 to 73% of volume in the U.S. equities market, 60 to 73% is algo volume. Okay. So now let me just ask you this real quick. Would you consider a program type of trade or an algo trade, an automated trade, a robot? Would you consider a robot a rational or irrational investor? How would you characterize a robot taking trades? A couple of people want to answer that real quick. How would you characterize a robot? Rational or irrational? And while you guys are coming up with those answers, I'm going to say hello to a few people. We got Stian. Okay, Stian has helped me out so much. Say hi to Stian, everyone. And by the way, real quick, speaking of Stian, you should check out. We have links in the description for Bybit and for MEXC. If you actually set up an account with one of those exchanges, deposit money and make trades, well, Stian receives a small commission, and it's just a small commission for that, and it goes a long way to helping us with the development of the community. Okay, so it really helps out all these new features and all this great experience that we're trying to make for the users. So just keep that in mind. It's helping out the community in a very positive way. So again, you can find those links in the description. And again, you have to deposit and you have to make trades. All right. Anyway, so let me see what kind of answers I got here. Anyone want to answer that? So let's see what people are saying. Rational. Okay, Paige. Again, all my members, right? Stian, Alex, Armin, Paige, all you guys. Okay, cool. Mr. Plow. All right, Raman, Isaac. Good to see you all. James from London. Yeah, so I'm making a point here. So you guys say rational. That is correct. Anyone in TradingView? Anyone on TradingView? I don't see anyone over there. So think about this for a moment. Now let's think about this. So if a robot is a rational trader or a rational investor, let's go back to efficient markets hypothesis, right? One of the drawbacks or one of the problems with efficient markets that people would always shrug off is that it assumed that investors were rational, right? Now we know that investors are not rational, they are irrational. That was 1960 or 1960s, right? So in the 60s, 70s, 80s, 90s, sure, we had a majority of participants who were irrational. Today, we have a majority of volume, because 70% is definitely not a minority, a majority of volume that is rational. That is efficient markets. Okay? This is why markets are random and why no one can make money. And all these people that claim to make money, I mean, some of these videos I've come across recently are unbelievable that people still believe this nonsense. But you can't beat a random market through conventional means, right? And as technology progresses, this majority of algo volume is only going to increase. I don't think it's going to get smaller. We'll probably have 80% or 85% of algo volume. So in order to compete with this, the retail trader is going to have some sort of automation in their strategy, right? And if you don't, then here's what's going to happen. I'll tell you what's going to happen. You're going to become an investor because you're going to say, well, it's too hard to trade. I can't make any money and I can't figure out why. It's just easier to invest. So I'll just buy some whatever and I'll just watch it and I'll make some money over time. Well, okay, but here's the thing. You take the most risk and you're at the mercy of the market at all times. So when the market just does generally well, you'll make a little money and you'll think you're a genius. When the market does bad, you're going to be like, oh man, this market sucks. Right? I'm going to go start a Shopify account and sell stuff on Shopify, which is, I think, what's happening right now. But anyway, that's what's going to happen. And do you really want to be exposed like that all the time? It's not a good idea. Because here's what happens. You'll say, well, I'll make money when the market is good. Well, here's what happens. You make money when the market is good, right? And then when the market goes into transition, you're going to still think you're a genius. Well, I made money before, so I'm just going to keep doing what I'm doing because it works, right? And then when the market turns, you are now stuck. And then the rationalization becomes, well, I'll get out when I break even. When I make money, when I make the money back, I'll get out. And it'll come back. The market always comes back. And then the market pulls back for real, and you get margined out. You lose 80% of your portfolio, whatever. You know how many times I hear this story? That's what's going to happen to you as an investor. There's no way around that unless you understand how markets work. Okay, but if you want to work on smaller time frames, that is how you mitigate that type of risk. But in order to work on smaller time frames, you must have automation somehow in your strategy going into the future. All right, so enough of that rant. Let's talk about the economic calendar, shall we? So I don't see anyone here on TradingView. Man, you guys just, Stian, I wanted to tell you, I came across another statistic that said August was record low, 5-year record low volume for Bitcoin. 5-year record low. What does that tell you? So anyway, all right. So you guys get that, right? Hey, Sean. All right. Good to see you all. So sell shoes, right, Mr. Plow? Right, on Spotify. I'm not Spotify, on Shopify. That's what everyone's doing these days. So let's talk about the economic calendar before I get into this chart. So economic calendar. There are quite a few economic events scheduled this week. Now, does anyone want to take a guess on what is going to be important? And we'll go from there. Anyone? Hey, Kai. Hey, Kai. Glad you're here. Kai, I sent you a message on Discord, a private message, but you probably don't log in there very often, so maybe you haven't seen it. Do me a favor. Log into Discord and check out your private message. I sent you one. That's the real me. Okay? I sent you one. By the way, if you get a message from me in the community, I normally don't send out private messages, so chances are it's the fake me. Just report that. Go into the community channel, tell everyone that you're getting fake messages, and then report them or whatever, and block them. Anyway, I sent you a real message, Kai. So check that out and let me know. Okay. So here are my check that out. So CPI on Friday, but CPI from what country, Stian? So there are a number of economic reports. Like I saw some things from the Bank of England, European Central Bank. I saw Bank of Japan. Anyone? Hey, Aries from Spain. How are you? All right. Mucho gusto. Hablo algunas español. I don't know if I said that right. All right. Anyway, so anyone want to take any other guess? Because again, there are a number of economic events. GDP. Okay, Paige, you got it. So when it comes to economic events, really, I'm only interested in global market moving events, or things that really affect the US dollar. And that would be anything like FOMC, Powell, CPI for the US, those kind of things. So you guys got it. Alice, hey, good to see you. So you guys got it. By the way, all of you that left testimonials in my testimonial channel, thank you so much. It was very generous of you guys. You guys also wrote some really nice things. I really appreciate that. So, and they're true. Obviously, you guys, I told you guys to be honest or whatever. And hey, Milad, how are you? Bunjil from Holland, good to see you. Thank you for joining. Okay, cool. Hope you're yeah. I know, Milad. It's been raining a lot around here. So Milad is like in New York City. Weather around here has been really, really rainy. But anyway, what else is new? So, economic calendar, Powell. That's really the only thing, Chairman Powell speaking on Thursday, that I say would carry any weight. So like I said, there's all these other countries that have these reports, that I saw here and I saw there. Those reports aren't global market moving reports. So here's what I suggest. If you're in a Forex pair, if you're in a yen pair, you're in a British pound pair, whatever, pound cross, you're in a euro cross, then you should probably pay attention to those other reports. They may have some sort of an effect intraday, but they're not major market moving numbers. Chairman Powell on Thursday is. So you want to be aware, because the market can get very erratic going into his speech. You don't have to watch the speech, but you do need to be aware of how the market interprets his speech after. For example, a week ago, we had the FOMC meeting. Now, from what I understood in the chat, the meeting was a non-event. I don't watch the meeting, okay? But it was a non-event. Meanwhile, the stock market sold off and the bond market rates continued to rise, right? Bond prices also sold off as after that meeting. So what was it? Why? I really don't care why, but the way I interpret that is based on the price action. I take it as, well, the market perhaps expected Powell to say something dovish and he said nothing. So then the market took that as hawkish, perhaps. I don't know. I don't get caught up in detailed nonsense like that. All I'm interested in is the price action. Okay. So that's why it's important. If he leaves any clues or if he says something that sets the market off, you want to be aware in order to mitigate risk. That's the key thing. So maybe you don't want to take positions going into that number. Maybe you want to take profits off the table if you have some profits going into that number. Now, we're assuming day trades and swing trades here. We're not talking about investments. Now, so that's pretty much the economic calendar. Good job, you guys. You guys picked it off. All right. So it's always the dollar moving events. So anything from US and non-farm payrolls, FOMC, CPI, those are the things you're looking for because those are the things that can move the dollar. Okay. Hey, Andre from Russia. Ah, okay. I can't really say anything in Russian. If I could, I would. All right. Hawkish pause, Ramen says. So yeah, right. Pause. So you guys get it. Okay, cool. So let's talk about this next. Let's start getting into this chart. So first thing, I'm going to make the chart bigger, right? So you guys can see what's going on here. Let's see. I think it's this one. No, that's the wrong one. Hold on. That makes me bigger. You guys don't want to see that. All right, here we go. So this is Litecoin that I have on my screen here. All right. And for those that read my TradingView article every week, I wrote about Litecoin yesterday. Usually I write about Bitcoin, but I wrote about Litecoin because I shared a trade idea from the trade scanner in my article yesterday. And that was a short Litecoin trade. Okay. That short Litecoin trade was called on Saturday by the robot at like 64.90. And it gave us a take profit of 62.90. What's today's low? 62.57. And it turned around. So let's just make that bigger real quick for a moment. Right. And let's take a look at the 4-hour chart. Right. And those arrows on my chart just point out the context. Right. That was the whole point of these giant arrows is we have lower highs below resistance. The general environment for this thing is bearish. So the idea of the article was this idea presented by the bot sensible or not? Right. So I want people to be able to interpret the context because it really helps with the confidence. And the idea was sensible. Right. Now, the thing is, the trade idea was called here. Let me show you. The trade idea was actually called right over here in this area, right in there, right around there. Okay. And it actually had that quick sell-off into that low. So you could see there was plenty of time to get into this thing, right? This thing was fooling around. Look at the highs here, right? 64.86, right? Going back a little, 64.85, the high, 65.12. So there was plenty of time between Saturday at 6 p.m. Eastern time and Sunday evening, right? Plenty of time to get into this thing. And by Sunday evening, the take profit was reached. Now, one point that I made in that article was if you were an advanced trader, you can move that take profit to a much more advantageous price, but you run the risk of getting caught in something like this. Okay. This could go to the stop. This could break you even, but the trade scanner suggested 62.90, and this thing got out for a green, nice green trade, and you're not caught in this. That's why in this environment, I suggest just sticking to those take profits. But if you want to give it more of a chance, that's your risk tolerance now. Okay. So let's go to Bitcoin. Let me know if you guys have any questions about that. Let's go to Bitcoin, and let's go to this. Now, as we can see, Bitcoin pulled back a bit as well, right? It's been very quiet. And here's what I want to point out. This is the lesson of today's stream. Someone in the active investor chat a few days ago, one of my members, he said he saw a double bottom developing in Bitcoin. And he said, should we buy this double bottom? And that was a good question because the thing is, not all double bottoms or chart patterns are created equal. Just because it's a double bottom doesn't mean it has the same probability all the time. So here's what I mean. Let's go to a 4-hour chart. All right. Now, what double bottom was this guy referring to? Let's take a look. Because usually these are small time frame patterns, right, that we're referring to. And this is the situation here, right? It was looking something like this, double bottom. And he was like, should we buy this thing? And it was after this pullback. And I said, I want to provide some context for you. A double bottom within a clear bearish trend or bearish structure. This is a bearish structure, okay? We have basically a support being taken out. There's a lower high over here, okay? Lower highs often lead to lower lows. This is not a bullish structure. Not only that, it's not just this structure that matters. It's also when you have to go to the bigger picture. You can't just analyze it on a 4-hour chart, okay? You have to look at the bigger picture. That's where context comes from. And I've been writing for weeks and weeks and weeks. I've been writing about how this thing is bearish, okay? Look, lower high, Lower high. What's this over here? Lower high. All right. What's this over here? This is basically, you could say, well, it's a higher high relative to this high back here. But the thing is, that's not a real higher high relative to the whole structure. This is the whole structure. All right. And this is where a lot of people get this wrong. They get too focused in on small price action. They're only looking at like this area right here. You have to consider, when it comes to context, you have to consider this entire thing. So when you consider that entire thing and you look at this high relative to that entire thing, that's still a lower high. On top of that, you have a resistance at 27.5, which has not been taken out. It's not compromised. It tried and it gave it back right away. It tried right here. It tried, gave it back, right? So it respected that resistance again. That's all bearish. That's all a bearish context. There's nothing bullish about it. So now that we've agreed that we have a bearish context, now when we judge our double bottom, okay, we should be able to look at that with a new set of eyes, because we'll be like, oh, okay, well, if the general context is bearish, supports generally break. So if I have a double bottom at what looks to be a minor support, because this is not a major support level, 25K is, we should know that, that's part of context, then chances are this is going to break, okay? So chances are you should not take the trade. Unless you want to be very aggressive and you want to take a day trade, you should at least be aware that probability is working against you here, and it broke. So you shouldn't be surprised, right? That should help you immensely, because people think just because there's a double bottom and maybe your oscillator confirms it and all this other nonsense, realize all of that is nonsense. You gauge the probabilities from the price structure, not from an oscillator. So this should have told you, right, in advance, okay, I'll try this out maybe as a day trade if you're that interested in it. Or maybe you say, well, I'm working against the probability. This is context. This is what I want you to be aware of. I'm working against the probability. Maybe I shouldn't take this trade. Okay. If your general context is bearish, what type of patterns should you be placing weight on? Anyone want to guess? Anyone want to guess? Let's see. Okay. Yeah, Kai. So if you just send me an answer on that, Kai, if you're interested. Okay, a couple home runs on those shorts. Yeah. The scanner was a lot of green in the scanner. Okay, so Yo-Yo says double top. Yes. So if your context is bearish, you don't place weight on double bottoms or failed lows or bear or bullish setups because they carry less weight. You place all the weight on bearish setups. So yeah, there was a lot of nice shorts in there. So in this context, so you guys are on the same page. In this context, if we are looking for trade ideas, whether they're day trades or swing trades, right, then we should be looking at resistance levels. This right here, which was a support, this area right here, is no longer a support, is it? Because it's broken, right? Look, I can even draw a line back here. It dates all the way back to here. That's not a coincidence. So, it acted as a support, right? Then it became a support again, and then it broke. Old support becomes new resistance and vice versa, right? Old resistance becomes new support. Our context is bearish. We broke this support. So what is the support now? Anyone want to tell me? You guys are following. What do I have over here in TradingView? Hey, Gordu from Austria, welcome. All right, all my European people here. Okay, I got Holland. Good music in Holland. All right, I'm a fan. Okay, anyone want to guess? What is this now? What is this area? Anyone want to guess? Resistance, Armanson, yes. So this is now a resistance. Look at what's happening here. So everyone gets excited, right? Everyone, oh, Bitcoin's going to 50K again, right? From all your favorite frauds. And what do we have here? What is this? It's a bearish pin bar. Is that bullish? Should you guys be going long? Darren Carter from Erdia, another UK, Londoner. Are you from London? Erdia. No, I don't make fun of London people. A lot of billionaires there. All right. So Is this bullish? Should we be buying this? Should we be optimistic? I hope your answers are no, right? So that's the lesson I'm trying to convey here. This is bearish. You should only be looking for bearish formations, double tops, failed highs, anything, bearish pin bars, which is what this is on the 4-hour chart. Anyone know how to trade this bearish pin bar situation? So let me ask you guys this. Do you know how to trade this? How would you trade this, number one? And number two, would you classify this as aggressive or conservative? How would you guys classify that? All right, we're focused on the bear. This is a bearish formation. Now, the candle is not closed yet, but if it closes like that, I want you guys to tell me. Most of you here are students. Okay, cool, Kai, cool. Yeah. Well, Kai, you've been a student. You've been through my program, and I like your view on things. So, Alice, why is it aggressive? Yorkshire, I don't know where that is, Darren. Yeah, Yorkshire sounds definitely. It sounds. What's the word I want to use? Sophisticated, not sophisticated. I can't think of the word right now. So Alice says this is aggressive. Why is it aggressive? You want to say? And why? And then we're going to go back to the 4-hour chart now. I'm sorry, the daily chart, because there's a little conflict here. Okay, so why is it aggressive? And let's draw some lines. All right. By the way, for people that are new to technical analysis, I realize that there are a lot of charts out there that have a lot of cartoons on them. They're very colorful and they have a lot of oscillators on them. Understand that you're being entertained. You're not being informed. You don't need any of that. All you need to do is evaluate the price action and the price structures, horizontal lines and squares. That's all you need. You don't need anything else. You could use some fibs. Yes, I teach that. You can use wave counts. Yes, you can use that. Chart patterns. Yes. Candlestick patterns. Yes. Oscillators. No. Colors, cartoons. No. This isn't nursery school. Please, you got to stop with those. If you consume charts or cartoons on them, man, you get what you pay for. All right. So too close to support level. Up north. Oh, okay. Oh, okay. Thanks, Darren. So Alice says it's too close to support. So Alice brings up a good point. On the 4-hour chart, that was a bearish pattern, right? But when we look at the daily chart, this is arguable here. Is that, the bearish pattern that we saw on that 4-hour chart is actually occurring in this little section right there. Okay, you see that? That's where it's occurring. But when we look at the bigger picture, this is sort of a bullish pin bar. It doesn't fit the exact definition, but it's sort of a bullish pin bar. So what do? Well, Alice got it right. This would be considered an aggressive short because you're shorting into a potential support level. Do you see that? This is a potential support. What we're doing here is we're putting together the puzzle pieces of context. That is a support level, and you may run into problems there. So it's aggressive. So this conflict, you have a bearish momentum, but you have a potential support. Now, it's not a heavy duty support, but it is a support. Your heavy duty support or your main support is here, right? The 25K area. This is your main support. This support is, we can call this minor, but it's still a support. In the daily chart, the candle here is trying to react to it. So if you get the sell signal on your 4-hour chart, meaning it takes out the low of that pin bar closes and it takes out the low, that's where you can decide, okay, if I'm going to be aggressive, you can go in as a day trade, or you can go in knowing full well that this thing may reverse in your face hard. So you monitor it. Perhaps you take a smaller position because it's classified as aggressive, right? Conservative would be you get that short signal, but at a resistance level. Does that make sense? You want resistance levels. So there are smaller time frame or minor support and resistance, and then there are larger time frame, major support and resistance. You have to be able to separate the two. It's very important. Okay, and that will help you gauge risk and how you want to manage your position. Is it going to be a day trade? Is it going to be a swing trade? You can make those decisions by gauging the probability of the location. Right, that's context. Now, when it comes to something like the trade scanner, a lot of that is taken off your table, right? Because a trade scanner is a trend following system and it looks for pullbacks or basically momentum reversals, right? So most of that work is done for you, right? All you have to do now is kind of look at some context and say, all right, I agree with this or I don't, just like I had with that Litecoin chart, right? And you don't even have to do that. You can basically trust the trade scanner, but it's not perfect. It doesn't take great trades all the time. It takes losing trades as well, right? Trades get stopped out all the time. But it helps, you can help gauge how you want to deal with that trade. Maybe you want to take a larger position. Maybe you want to take a smaller position based on the context. Maybe you don't want to take the trade at all, right? Because of the context. And by the way, we're setting up so that you can receive those signals by email. Okay, so you don't even have to log into the community. We're not set up yet for that, but that's our next thing that we're going to set up. And it'll be as simple as check your email, check your inbox. You have your orders, place the orders, right? Step 1, check inbox. Step 2, go to your platform, place orders, and you're done. That's how easy it's going to be. All right. So you don't even have to. We're going to get it to the point where it's so convenient that you don't have to log into the Discord server, because right now that's where the signals are. Okay, so you guys follow me on this? You guys follow me on what we covered here? So we talked about aggressive, conservative. We talked about context, and we talked about placing weight on double bottoms and double tops based on context. So double bottom, double top, again, other patterns, pin bars, right? That's a reversal pattern. Failed high, failed low. That's also a reversal pattern. Okay. You may have a higher low or a lower high, right? This situation right here is a lower high. So those you're going to get after the fact, right? We know this is a lower high after it establishes itself and pushes the low. Now it's a lower high, right? That part helps you with momentum. You're not really going to take trades off of that. That only looks nice after the fact, okay? So sometimes when you're dealing with a short signal going into support, again, there's a good risk that thing will turn around and squeeze. So if you're dealing with that, you may get the breakout, and that's maybe what you're looking for, but you also may get squeezed, right? So what do you do in those situations? Should you just let it go to the stop? If you're prepared for that thing to go wrong and it starts to give you signs of going wrong, you just get out. The smallest loss is the best loss. You don't sit there and stare at it, right? That's being proactive. And that's something that I try to teach my students. By the way, students, we have a student meeting this week. It's going to be on Thursday. Okay. I haven't put it on the schedule yet, but I'm going to put the invite in the channels for Thursday at this time, same time. Okay. So you guys clear on that? All right. Mega from United. Okay. Another one. Oh dear. A lot of Londoners, and we got the British today. Oh dear. All right. So yeah, a lot of billionaires over there. A lot of billionaires. Okay. Aristocrat. That was the word I was looking for. From Yorkshire. You sound very aristocratic. Here they are. All right. No more British accents for me today. All right. You guys clear on that? Do I have any questions from my students? So again, students, we have a student meeting on Thursday. Okay. I'm going to put the invite. I haven't set that up yet, but I will. Student meeting on Thursday. All right. I'm just scanning the chat here. All right. Any questions from students? Okay. You guys, by the way, press the like button, plus the boost button on TradingView. If you like this stream, if you like this content, I am trying to provide a lot of value here. I got more stuff on the way. Once we get the new site going in that, I'll be able to focus more on creating content. But we've been putting out weekly. We've been putting out some clips from my older streams, some important points that I make. We could thank Alice for that. He's been doing a great job for getting those clips out. There's always some kind of educational element. Yeah, I know it's me in a small little thing here, and it's not the best produced, but you know what? There's a lot of educational value in those. So check it out and press the like I said, subscribe to the channel, press the like button if you like this content. Okay. Think of the railway children. You will get the picture. Okay. I'll have to Google that, Darren. Thank you. Thank you for letting me. I need to work on my British accent. I know it needs work, definitely. Dollar index from Raman. Sure. Let's take a look at that real quick. All right. So dollar index, right? And oh, by the way, I didn't take a look at the bonds. Look at this thing. Look at the dollar index. This thing is the new altcoin, dollar index. Look at this. Look at this. Is that bullish or bearish? What do you think this is a reflection of? Do you think this is good for the stocks? Look at that. New highs, dollar index. Okay, now this is in failed high. It's in a failed high region over here. Look at this. It's in this resistance area right here, but no sign of turning around yet. Okay, so I wouldn't be going nuts buying dollar here. I wouldn't be going nuts, but certainly wouldn't be fighting it either. Let's take a quick look at the bond market. All right, for those of you that are new, look at this. I've been talking about the bonds for 2 years now. Look at this, new lows on the bonds. Guys, prepare yourself for bank failures, all right? Because this puts a lot of regional banks under pressure. And, they're not going to advertise in advance. They're not going to say, well, we're kind of having a problem, so you should take your money out before we fail. No, it's when they can't contain it anymore, it comes out, right? This is bank failure territory. So please keep that in mind. This is rising rates, right? Let's take a look at the yield curve. Right, US 10Y, okay? New highs. What are we at right now? 4.5, 4.54%. Is that what that says there? So, yeah, new highs, right? Rising rates. That's what we're going into. Ever since that Chairman Powell, ever since the FOMC meeting, rates have been rising. What does that tell you? That's not good. So anyone that says Bitcoin is going to be at 100,000 by next year, this tells you right here that that's not happening. All right, let's take a quick look at the S&P. I think the stock market was bullish earlier. Right, it's trying to bounce. The stock market's not going anywhere. That's the S&P. Not with rising rates like that. It's just, it puts a cap on everything. I've been warning about that for a long time. That's the reason why I had not put anything in the speculative growth channel. I have a channel in the server, speculative growth stocks. With the word speculative in front of it, those are high-risk growth stocks. And one thing I know about high-risk instruments is they don't do well in rising rates. And rates have not cooperated with us the entire year. So I'm not going to put stocks in there. Like I considered Butterfly. I considered another one, Gamb. It's a gambling one. I considered a few of these stocks. But I'm like, if rates are going to continue to rise, why bother taking the risk? There's no point because we're going to get better prices anyway. And a lot of these stocks are going to feel the pain, okay? So in this, as far as investing goes, this environment is really more for the conservative stocks that pay you to hold on to them, that kind of thing, because they're going to feel some pain too. Stocks that borrow money will feel pain. That's the way it works. Okay. Do you think that the bank failures could serve as a catalyst? I know risk assets need cheap money, yes, but rallied on, well, right, but those rally, I wouldn't tie in bank failure to Bitcoin success. I would not, because Bitcoin still needs cheap money, right? If banks are failing, I don't think all the money runs to Bitcoin, especially central banks don't exactly want that, right? Central banks don't like this idea of Bitcoin to begin with. So I would not put much weight. I wouldn't say, oh, bank failure is good for Bitcoin. I wouldn't make that relationship. Okay, I would just let Bitcoin tell me what it wants to do. But in the face of rising rates, I don't care. If rates are rising and dollar is rising, it only puts pressure on Bitcoin. It doesn't help. Okay, so that's what you have to keep in mind. It puts a cap on everything. So Bitcoin going to 35K, 40K, all of that is just nonsense. It's nothing but entertainment. It may happen, but not with rates rising. Rates are going to have to peak and rates are going to have to turn. And we're going to need bank intervention for that. Who else? How else are we going to get to there? You realize, in 2020, the Fed overreacted. They put rates at 0 and all those stimulus checks came out. They never should have done that. Now we have this opposite situation, right? And rates are just continuing to rise on their own. The Fed is not doing anything. They're trying to control the inflation. And now we got problems, right? So in order that all that rally that we had back then was the result of too much stimulus, and that was it. So we're not going to see anything spectacular here until rates cool off. And I don't see any sign of that. We're making new lows on the bonds. All right. So I don't see not even the beginning sign of it. It's not like the bonds are going to find a bottom and then just bounce. The bank needs to do something. Maybe we need a new administration. Maybe some people need to be replaced. I don't know. But I don't see any changes, right? The price action isn't showing me any changes. So I hope that answers your question. When checking ZN1, can we say it break the range? Well, it broke the lows. I said it broke. Those are new lows on the bonds. That's an important thing because the bonds haven't been here. Okay. So if they keep going, watch out for the banks. Microsoft and others close at 382. Can we expect going lower? Well, possibly, Alice, possibly, because again, the rising dollar, the rising rates will put general pressure on these things. So that's why I wouldn't be overly optimistic until we see some of these changes. Because here's the thing, the bonds will turn first. Okay. They don't turn and then the stocks turn the next day. It takes time. So it's not like we have to sit there and try to time the bottom of the bond market. The bond market needs to establish its bottom, or it needs to establish a new range, and it needs to let us know that it's not going, that rates are not going to continue higher. We need some sort of idea of that. We don't even have that right now. Okay, maybe the Fed can change its language or something. Something needs to change there, and I just don't see it. Okay, so pay attention to these charts, not what people say. And until I see that, and that's why the whole time people say this, oh, the bond market is fine, blah, 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 blah. And then bonds go and push new lows. Never trust people. Even Chairman Powell, right, comes out and says they're not, no more recession, while their own tools or whatever, their own things say that, there's still a sign of recession or whatever that was that Alex put in the channel. I mean, again, you can't even trust what they say because they're not going to tell us the truth. Okay. They use their language to shape our perception, to hold, maybe, push us a certain way. Never listen to them. Listen to the charts. Okay. How can I join a community? There's a link in the description, Samson. Just go to the Discord link. You have to be on Discord. That's where it is. And there's a free area there. Okay. All right, you guys. So I think I've addressed all your questions. Okay. Let me just read the chat here real quick. Okay, cool. All right, we have a community chat in there, and you can ask questions. All free members can ask questions. We have a number of moderators that are very happy to answer questions and to steer you the right way. Okay, there's a lot of other free information in there as well. All right, guys. So I went over my time. I'm supposed to only do 30 minutes, but I can't stop talking. I like to talk. All right, you guys. So that's it. Hey. Thank you all for joining me. If you have any questions, you know where to find me. Please press the boost button. Please press the like button. Thank you for watching. Do you think Bitcoin will eventually lose its spot? I don't know. I mean, maybe. That I have no clue. I don't pretend to know the future. I just go by structure. I go by price levels. I go by, price action, and I make my judgments with that. And I look at that in the context of an overall global economic environment, okay, whether it's domestic, US, or global. What are other central banks doing? I look at everything in that context, and that's how I judge, is this environment ripe, or is this environment fertile for investing, or long-term investing, or short-term investing, or trades, and what kind of potential can I gauge based on this? And right now, this is a low potential environment, in my opinion. That's why swing trades, getting in, getting out, taking your money, and protecting your capital should be your priorities. Not, oh, I'm going to invest $10,000 because Bitcoin's going to be in 100,000 in 5 years, right? You can't go by that. And I see a lot of people pushing that kind of stuff, and all they're doing is misinforming everyone. Okay, so okay, cool. All right, cool. Thanks, guys. So again, thank you guys for watching me. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.